very good evening. You're watching Primetime. I'm Tamanna Inamdar.
And my name is Ayush. Let's start by taking a look at today's headlines. Jerome Powell is likely to be Donald Trump's pick for the Federal Reserve Chairman's role. The announcement is due in a few hours from now.
An employee files an insolvency plea against his employer for not paying him due salary in time. Delhi bench of NCLT admits the plea.
Well, you can now protect yourself against social media attacks, data breaches, identity thefts, and extortion, apparently.
Divi's lab rallies close to 17% after the US pharma regulator says it will clear the Vizag plant.
Bitcoin shoots past $7,000 for the first time ever. The cryptocurrency has gained more than 640% so far this year. Well, let's start off with our top story. Now, Jerome Powell has emerged as the frontrunner for the top job at the Federal Reserve. The change of guard at the Fed comes at a time when U.S. economic growth is accelerating, inflation is tamed, and unemployment is the lowest in 16 years. President Donald Trump is expected to make the official announcement at 12:30 a.m. India Standard Time.
And Bloomberg's Mike Mickey joins us from New York to give us a better sense of what to expect from Powell. Hi, Mike. Thank you for speaking with us. First up, what are the challenges for the new Fed chairman?
Well, the first challenge is going to be just keeping things on an even keel, managing the transition at a time when the Fed is emerging from extraordinary economic policy to keep the balance sheet reduction going without having it upset the markets and to continue to communicate with the markets what they want to do. The real test for Jay Powell is going to be when something changes in the U.S. economy. Inflation starts to go higher or the economy starts to slow down, and he has to change policy from what's already in train. That'll be when Wall Street gets its first look at the new chairman and how he's going to handle things.
Right, Mike, and also, considering, this announcement is to be made shortly, how do you think markets will react to this announcement of Jay Powell?
Well, we've basically already seen it. They look at him as a continuation candidate, somebody who will do what Janet Yellen was doing, and his comments so far in public over the last couple of years would suggest really no change in policy. So they're happy with that. We're seeing stocks go down in the U.S. today, probably on the tax reform data that is coming out, but not on Jay Powell. We saw bond yields go down a little bit. People are less concerned than they would be with someone who might have come in and wanted to raise interest rates quickly.
Also, Mike, is continuity going to be the key theme when it comes to his mandate?
Well, the mandate is to, in the U.S., maximum sustainable employment and price stability. And Powell made this very clear a couple of times this summer in speeches that the U.S. is as close to its mandate as it ever has been. So he's going to try to steer a course, steer the same course, basically, that Janet Yellen has, with gradual, predictable interest rate increases to keep the U.S. as close to that mandate as possible. They don't want inflation. They want it to rise a little bit, but not to rise too far. And they don't want the economy to start to slow down.
Thanks so much, Mike McKee, there on that big announcement in just a bit from now. So just who is Jerome Powell? Here's all you need to know about the possible successor to Janet Yellen.
Meet the next Fed chairman, Jerome Powell. Jerome Powell is a former private equity executive who has worked with the Carlyle Group. In 2016, his financial disclosures listed assets of as much as $55 million. A Republican, Powell is known to favor easing financial regulations and gradually hiking interest rates. He was rated as a neutral when it comes to monetary policy by Bloomberg Intelligence's Fed Spectrometer. He was appointed to the Federal Reserve Board by Barack Obama in 2012 and has never dissented on the Federal Open Market Committee. If elected, he'll be the first Fed chair since Paul Volcker in the 1980s without a PhD in economics.
Well, Bloomberg News caught up with a number of experts to get a better sense of how Jay Powell would be as a regulator compared to Yellen. Listen in.
He's known to perhaps favour a little bit less in terms of regulation, and they're the main differences versus versus Yellen. And of course, he's also not a trained economist, so I guess that's the third difference. I reckon he'll be more like a chairman of the board. If you go back through the period that he has been a Fed governor, he has not dissented. He has broadly supported the direction the Fed has taken. The difference might come if we go into a crisis at some point down the track, and I think he would probably have to rely more on advice than a Bernanke or a Yellen did, because don't forget, they were already well versed in what happened in the 1930s, what happens in financial crises. So he'd have to be someone who would take advice more. But at the end of the day, I think he's a good choice for President Trump to take.
He is pro-bank deregulation. He worked on Wall Street most of his life, and cash as a percent of assets has never been higher in banks. So of all the sectors that will benefit from this, it is the banks. I think we can call today's, when it is eventually officially announced, I think we can look back in history and realize this was peak regulation for the banking sector. And even if it takes a couple of years for this to filter through into Europe and Asia, it'll start to price in much faster than that. So I think that it's beneficial for our financial sector as well.
He certainly hasn't had an experience during crisis. I mean, he's been there for the past 5 years. His experience is really in private equity as a salesperson rather than investing. I'm not sure what he knows about the inner workings of the financial system.
The clear positive of Jay Powell is he understands regulation, and he's very committed to efficient regulation, thinking about how can you have regulation which protects the system, but it doesn't impose too many economic costs on businesses. So I think that's very good. And I also think that we will probably get a continuation of this normalization process. I suspect if we'd had more of a macroeconomist, they'd be more likely to mess with what the Fed is planning to do. But I think for the first few years, we'll actually just see a continuation of the Yellen Fed. So I think that's pretty good, but it's going to require more than that, because we really don't have, I think there's a lot of uncertainty about long-term policy in the United States.
Now, if Powell is selected as the next chairman of the Federal Reserve, it would mark the end of Yellen's distinct tenure. Yellen is the first woman to be chairperson of the Federal Reserve and has overseen many major policy changes. Here's a brief lowdown on Yellen's term as Fed chair. Under her watch began the U.S. Gradual exit from global financial crisis-era policies. The controversial bond buying campaign was halted. Interest rates were lifted from zero, and the process of unwinding the $4.5 trillion balance sheet was finally begun.
The macroeconomic numbers sum up Yellen's era in a nutshell. Unemployment fell to a 16-year low, inflation is under control, and the economy is currently in its 9th year of expansion. The standout feature of Yellen's term is her adherence to gradualism and data. Aggressive rate hike assumptions, which were a norm till 2015, were set aside by Janet Yellen. If she's not reappointed, Yellen will be the first Fed chair in 39 years to serve just one term. The last time that took place was 1979, when former Fed chair Paul Volcker was not given a second term. And you can find all of those stories and all the top business and corporate stories of the day, of course, on BloombergQuint.com. Now, the Bank of England raised interest rates for the first time in a decade to 0.5% from 0.25%. Led by Governor Mark Carney, the Monetary Policy Committee voted 7-2 in favour of a rate hike. The move removes the emergency stimulus introduced after the UK voted to exit from the European Union. The main reason for the rate hike is to bring inflation close to the central bank target. Inflation in the UK is currently growing at the fastest level in 5 years, a percentage over the 2% target fixed by the central bank. Bank of England also maintained its growth and inflation forecasts unchanged and kept its bond programs unchanged. Bank of England Governor Mark Carney said that the monetary policy will continue to provide significant support to jobs and growth.
Inflation is unlikely to return to the 2% target without some increase in interest rates. Of course, these aren't normal times. Brexit will redefine the UK's relationship with our largest trade and investment partner, and it will have consequences for the movement of goods, services, people, and capital, as well as the real incomes of UK households. The MPC has repeatedly emphasized that monetary policy cannot prevent either the necessary real adjustment to new trading arrangements or the weaker real income growth likely to accompany that adjustment. We can, however, support the economy during the adjustment process. The MPC continues to expect that any future increases in bank rate would be at a gradual pace and to a limited extent.
All right, Nera Cheheka of Bloomberg joins us now from London for more on that story. Hi, Nera. What is the rationale behind the decisions to hike rates? Is inflation the only worry?
Well, the rationale that we got from Mark Carney in the press conference, the way they sold the rate hike today, was that it was simply a little bit of a removal of stimulus. Because remember, even though this is the first rate hike in a decade, it does just reverse the cut that we got post-Brexit. Now, that said, you could argue that really the hike today was about maintaining credibility for the Bank of England, because markets ahead of the decision today have been fully pricing in this rate hike. So perhaps Mark Carney didn't want to yet again be dubbed an unreliable boyfriend, as he has been in the past. But you could also argue that one of the reasons to hike today, and the Bank of England acknowledges too, is inflation is of course above target, 3%, 1 whole percentage point above the target rate. But the questions are, where is that inflation coming from? How transitory is it? And this is where the discussion gets a bit more complicated.
Nera, I just wanted to understand this. In its policy statement, did the Bank of England flag off concerns about the economy by indicating that another increase is not on the cards for now?
So today what we got was a dovish hike. That was really clear, not just from what we got from the statement and the comments afterwards from Mark Carney, but also in the way that the market reacted. So first of all, looking at the statement, one key thing that was removed was a line where in the past the Bank of England had said that the market was underpricing the future rate hiking cycle. They did not say that today, so that was interpreted by dovish as the markets. They also pointed to risks to the outlook, mostly coming from Brexit, another dovish point that, of course, the market reacted to. So in terms of how the Bank of England from here deals with perhaps any hits to the economy going forward, well, it said that any hiking that comes is going to be gradual. In fact, what it indicated was that what the market was pricing in right now was pretty much about right, and the Bank of England was comfortable with that. And that is another hike coming in late 2018. Market expectations for that were pushed back from August previous to the decision to about September, even November at one point during the press conference, and then another hike in 2020. But bear in mind that even with those two hikes by the end of 2020, the Bank of England is still forecasting that inflation will remain above target at 2.2%.
Nera, how have markets been reacting? You mentioned it briefly, but if you could elaborate on that, and what are market participants saying in their comments?
I didn't catch the last part of your question, but in terms of the market reaction, so you can probably see that much better on your Bloomberg screens than I can standing out here. But what I can tell you is that we did see a drop in the pound of around as much as 1%. We saw gilt yields coming down, but crucially, it's the rate curve where we saw some repricing in terms of the expectations in the market of future rate hikes. Because one of the big questions ahead of today was, if we do get a hike, is it going to be a one and done, or is it going to be the start of a more aggressive hiking cycle? What it looks like, all right, it might not be one and done, but the hiking cycle that we're going to get is a little bit softer than what markets had been previously expecting, in that the next hike, as I say, before the meeting, markets were expecting that in August 2018. That has been pushed out now by at least another month.
All right, Nera, thanks so much for that update from London. Now, the Delhi bench of the NCLT has admitted an insolvency plea filed against Applied Electromagnetic Private Limited. What's new this time? It's an employee filing an insolvency petition and not the lenders. Why was this petition filed, and what did the court really say? Shivani Saxena has the full story.
Delhi bench of the NCLT admitted yet another insolvency petition, this time against Applied Electromagnetic Private Limited for its failure to pay its employees' dues on time. Employee Nitin Gupta had contended that the delays led to an accumulated unpaid salary of approximately 46 lakhs. The company contested these claims, saying that they're barred by limitation, to which the tribunal held that a portion of these claims arose between 2015 and 2017 and are clearly not time barred. The company also argued that the petition be dismissed since the employee had already approached a labour law authority in relation to these claims and is now forum shopping. NCLT rejected these arguments and interestingly held that no law prohibits an employee from initiating insolvency proceedings even if it had complained before a labor law department. It held that once a company has defaulted on its payment of an employer's due and the default amount is over 1 lakh rupees, the employee is then qualified to file an application under the code. Since the insolvency application has been admitted, this entails that the control of the company move from the hands of the director to a resolution professional and a formation of a committee of creditors and the whole rigmarole.
Now, if you want to be on top of the news cycle through the day, there's another easy way to stay tuned to BloombergQuint.com. Please subscribe to our newsletter. All you need to do is to go to the website BloombergQuint.com and all the information and details are right there. Now, cyber and social media attacks, data breaches, identity thefts, extortion and bullying is becoming a bigger problem by the day. And finally, you now have an insurance product that can provide cover. Ridhima Saxena is here to tell us more on that. Ridhima, tell us about this new insurance product.
Well, yes, if you're 18, you can buy Bajaj Allianz General Insurance Company's insurance on cyber risk coverage for individuals. With India's penetration in digital increasing over time and India becoming one of the top Facebook and WhatsApp users in the world, this becomes extremely pertinent. Now, what this insurance cover will do, it will cover all your legal expenses, your defamation costs and your restoration costs. In fact, in a press release that the company released today, it stated that will also cover the transportation for court summons, the counseling and the extortion losses. The insurance cover or the sum insured will range between 1 lakh to 1 crore. Some of the analysts we spoke to, including Ashwin Parekh, who is an insurance expert, said that there should be a special team that should be put up for analyzing and assessing the losses that the insurance company will incur, because this becomes extremely important as it is difficult to ascertain the losses that will be incurred in cases of cyberbullying and cyber stalking. He also said that in such cases, this can easily be equated to motor insurance schemes in India, which are long drawn traditionally because they are always under litigation. And this will also start accumulating and piling up, just like the motor insurance third-party cases.
Thanks so much for that news update. And if you want to catch all these news stories and all the top headlines that you see on Bloomberg Quint throughout the day, you can always log on to www.bloombergquint.com and stay ahead of the news. Now, a big story from the day. Divi's Laboratories jumped over 16% after the US drug regulator lifts an import alert on its facility in Visakhapatnam. How much of a relief is this for Divi's? Darshan Mehta took stock of that question in this report.
It does, because this was one of the biggest overhangs that Divi's had. What had happened was last year the US FDA came and inspected the plant of Divi's, in which they gave a Form 483 with 5 observations. Later it came out to know that it was serious in nature, and then the US FDA put an import alert, and then came a warning letter. An import alert means that Divi's was not allowed to export anything out of that. But due to shortages in the US markets, some products or a lot of products were allowed to be exported. Now then there was this re-inspection that happened a couple of months ago, and now they've been cleared totally. So what this means financially, since most of the products were already being exported, financially doesn't make much of a difference, but sentimentally it's a big boost, because now they can go ahead with their expansion, they can go ahead and export the other products also. So that's a big plus point that's coming in for Divi's, and that is why the big sentimental overhang of a US FDA import alert is lifted. The counter was up almost 16% in trade today.
Indian markets took a breather today amidst the strong ongoing rally. It was a mild session pressure in ITC, State Bank of India and Reliance Industries weighed on the markets. The Sensex ended mostly unchanged, while the Nifty fell marginally. The pharma sector eked out strong gains, while FMCG space saw sharp cuts. Pradeep Pandya sums up the day's market action.
Some profit booking today after yesterday's record-breaking moves on Sensex, Nifty and also Nifty Bank. If you look at the benchmark indices, they were quiet, not really correct, but were more or less flat through the day. Although there was correction in mid-cap and small-cap, especially in the second half of the trade. Although mid-cap and small-cap indices actually closed higher, so there was, more volume on the buying side than on the sell side. But the numbers finally, if you look at the advanced decline, was roughly 50-50. The sector of the day was pharma, and the stock was DV's Lab that got a clean chit on the Vizag plant. And not only DV's, but the entire pharma pack moved up. Look at Sun Pharma, Aurobindo, or several other key pharma stocks. They all did quite well today on the back of this announcement coming from DV's. IT was another pocket that was a significant mover, although one exception was Tech Mahindra, where results were not that good. But if you look at some of the mid-cap or rather small-cap like Hexaware, 8K Miles, Sonata Software, or even Infibeam, if we include it in the same list, all these companies did quite well on the back of some news or upgrades or a buying momentum that was really building at these counters. Some more mid-caps worth naming would be Symphony and Rain Industries that moved up on the back of good numbers and also the upgrades coming from the brokerages. On the negative side, there were not many stocks that kind of corrected with good volumes. Other than these two, GVK Power and Infra hit the second lower circuit today. That is after a series of upper circuit, around 10 or 11 upper circuit, before the two down circuits that we have seen here. And Ruchi Soya was really an interesting counter that kind of trapped many day traders because people were not really able to understand the structure of the deal. And for a while, traders probably realized that there was a significant premium that the PE investor was paying. And when the details came out, the stock crashed from 34 odd levels, that was the day's high, to close near 29.45.
Vedanta earnings missed analyst estimates in the September quarter on account of higher input costs and currency appreciation, although the net profit jumped 46.8% to come in at 2,091 crore rupees. It fell short of the Bloomberg consensus estimate of 2,242 crore rupees. Their revenue rose 36% to 21,590 crore rupees compared to the same quarter last year, which was in line with estimates. Vedanta also missed estimates on the operation front as EBITDA rose 21.3% to 5,669 crore rupees, while EBITDA margin contracted to 26.25% from 29.5%.
Now, Power Grid posted a better than expected net profit, beating analyst expectations in the September quarter. The net profit rose 14.4% to come in at 2,141 crore rupees compared to the same quarter last year. The bottom line rose despite a 19% increase in total expenses, led by an increase in cost of employee benefits. Their revenue increased 16% to 7,253 crore rupees in the same period. The EBITDA was 15.6% higher at 5,605 crore rupees, and their operating margin contracted 30 basis points from last year to 89.3. And you can stay up to date with all the news and updates by simply subscribing to our WhatsApp update service. It's really that easy. Just go to BloombergQuint.com and all the information's right there. Now, ahead of the assembly elections, Prime Minister Narendra Modi addressed a rally in Himachal Pradesh today. Modi attacked the Congress manifesto for its zero-tolerance policy on corruption at a time when Chief Minister Veerbhadra Singh was facing corruption charges. Continuing the attack, he called Congress Vice President Rahul Gandhi's meeting with the Chinese ambassador over the Doklam standoff and not with the elected government as insulting. Calling the state's ruling party a laughing club, Prime Minister Modi made a strong pitch for bringing BJP to power in the hill state.
कांग्रेस पार्टी अब एक लाफिंग क्लब बन गया है, लाफिंग क्लब। भ्रष्टाचार पर केस चल रहा है, गंभीर आरोप लगे हैं, उसके बावजूद भी कल टीवी मीडिया के सामने आकर के अपने मैनिफेस्टो दिखा रहे हैं और मैनिफेस्टो में कह रहे हैं कि कांग्रेस की सरकार हिमाचल में बनेगी तो करप्शन पर 0 टॉलरेंस होगा।
Well, Bitcoin's meteoric rise is attracting a lot of attention. But the real question is, considering this rally or this rise, is it ready for the mainstream? Have a look.
Bitcoin's meteoric rise is attracting a ton of attention. But is it ready for the mainstream? JP Morgan Chase CEO Jamie Dimon recently called Bitcoin a fraud and said that cryptocurrency prices are in a bubble that will eventually burst. Many investors have stayed on the sidelines as cryptocurrencies are seen as too volatile and don't have the safeguards that most financial assets do. A number of hedge funds, however, are investing in cryptocurrencies, and Goldman Sachs is reportedly exploring how it could help clients trade digital tokens. Other companies are stepping up efforts to bring cryptocurrency to the mainstream, opening regulated exchanges, creating futures contracts, and attempting to list exchange-traded funds. The recent surge in cryptocurrency prices has coincided with a flood of interest about the blockchain technology behind Bitcoin, which uses a decentralized and public ledger of transactions that can't be manipulated. IBM, Microsoft, and Toyota have all invested in blockchain and are looking at potential applications ranging from food safety to driverless cars. So what is preventing even more widespread adoption? Regulation, or the lack thereof. In July 2017, the SEC announced that federal securities law may apply to some cryptocurrencies without providing concrete guidelines to determine which ones. Meanwhile, China has outright banned ICOs, or initial coin offerings, along with the exchanges where coins are traded. Guidelines for individuals that mine and trade cryptocurrencies also vary wildly, with countries like Venezuela going as far as putting miners in jail. So what's next in the year ahead? The cryptocurrency community is eager for clarity from regulators on ICOs, trading, mining, and taxes. As that happens, more investors and end users could dip their toes in the water. Many have compared the current state of blockchain to the early days of the internet, a digital Wild West teeming with opportunity. And just like the internet, there will likely be winners and losers.
Now, while the buzzword amongst Indian telecom players seems to be 4G feature phone, Nokia has a different take on the Indian market. I caught up earlier with Florian Saiche, CEO of HMD Global. That's actually the Finnish startup that actually runs the Nokia device brand. Well, he told me that Nokia is watching that space very closely. Listen in. Is the 4G feature phone market something that you'd like to tap?
We are certainly looking at this very, very carefully, and because by nature, because we are so strongly present in the feature phone business, this is obviously something we watch very carefully. And then also, we definitely see a big upgrade trend over the coming years from feature phone to smartphone. But we also recognize some consumers might take a little longer, or they might take different steps before they upgrade to the smartphone. So again, we're watching it carefully.
But do you see it as a challenge, or is it something very unique to the Indian market, according to you?
I think not unique to the Indian market. I think we do see from an operator perspective, the move to 4G, we definitely see as a trend for the future.
All right, you can obviously catch that whole conversation at 10 p.m., but that's all the time we have on this show. Thanks so much for watching. Stay tuned.
Primetime Debate up next.
Are we live?